Good morning, my name is Jeff Evans, taking you through the AAT Advanced Bookkeeping Practice Assessment number 2. A few people have asked me to do it, so here we go. So first question, I'm sure that you're aware of, but it says you're working in the accounting records of a business known as A&BR Trading. A&BR Trading is registered for VAT. The business has part exchange an item of machinery used in its workshop, and the following is relevant. Start again. The following is relevant purchase invoice. Is the relevant purchase. So we've basically got this screen printer with the code SP420, cost 4950, and we've got the compatible floor stand that you need that goes with it, supply and fit on premises, which is 596. So all examples of capital expenditure. The screen mesh is more revenue expenditure. So when we look at this figure, we need to look at what is it we're going to include in the non-current asset register. Okay. So let's have a look. So it says part exchange with printer PM101, which is this one here, and the balance of £5,306.40 is settled by hire purchase agreement. So it's telling us here, first of all, that we've got the total amount is, and also that we've got the it was part exchange. So we'll do that first, and we'll go through each of these tables and put them in as we're going along. Okay, so those two added together equals 5546. You'll notice that I've already put the information in. So printer stand here, SP420. It was acquired on the 31st of the 7th, 06, 31st of July, 06. 5546, we'll leave the depreciation for the moment, we'll come back to that, and it was hire purchase, okay? So we'll just put the information that we've got first. We'll do depreciation in a minute. The next one is the printer that, let's have a look. The following information relates to the printing machine replaced by the business, okay? It was disposed of on the 31st of July at 6. So again, let's put this information in. So we'll find it, the PM101, and the part exchange value is 1750. So again, put it in straight away, which is this one here. So just put the information in. So the disposal proceeds is 1750, and the disposal date was 31st of the 7th, 06. I've not done any calculations at the moment. I've just put the information in from the two tables, okay? So now we'll do the depreciation. It says A&BR Trading has a policy of capitalising expenditure over £750, meaning that we would put it in the fixed asset register or non-current asset register if it was over 750. And it says plant and machinery over 8 years on a straight line basis, assuming no residual value. Okay, so all we'll do is whatever the cost is, we'll divide it by 8 to work out what the depreciation is. Motor vehicles are depreciated at 25% on a diminishing balance basis. And it says a full year's depreciation is applied in the year of acquisition and not in the year of disposal. So for this one here, a full year's depreciation when it was acquired, but there's none in the year of disposal, which relates to this one here, you see. So the year end 31st of 3rd 07, we sold it on the 31st of the 7th 06. So again, in the year of disposal, there is no depreciation charges. So therefore, obviously, at the end of the year, there's no carrying value because we've already sold it. As far as the printer's concerned, so again, we said before, it was basically plant and machinery is depreciated over 8 years on a straight line basis, assuming no residual value. So the 5546 divided by 8 gives a depreciation charge of 69325, giving us a carrying value of 4852.75. So literally, cost minus depreciation gives you carrying value. As far as the motor vehicles are concerned, it tells us that depreciation is done on a 25% on a diminishing balance basis. So the story of this one is we've got, so year end, so 2000, so it was bought for £9,440 and 64 pence. And then it's depreciated over the period, but loan it was acquired by. So we've got, this is the year end 31st of the 3rd, 2005. So depreciation charge was 2360.16, which gives us a carrying value of 7080.48. So it's done up 25%. So 25% of the carrying value gives us 1770.12, which gives us the carrying value at the end of the 2006 of 5310.36. Let's double check it. So for the year end 31st of the 3rd X7, we've got 5310.36 times 0.25. Yeah, so 1327.59. So depreciation charge for the year is the 1327.59, which gives us a carrying value of 3982.77. Similarly, with this particular van, so we've got the carrying value at the end of X6, so 6540 times 0.25 gives us a depreciation charge, and the carrying value for starts at next year. Okay. Next thing says, which of the following best describes the residual value of the non-current assets? Okay, so that's basically what you're going to get for it at the end of the period. So it says expected market value at the estimated date of disposal. So yeah, so the residual value is the value before you dispose it, isn't it? Okay, you tend to take that off when you're working out the depreciation, as you know, if you are given residual value. So cost minus residual value over the time. Okay. Okay, let's go on to the next one. To 1.2. I do like to draw T accounts when I'm doing this particular question, but obviously, given the fact that we're doing it online, it's a bit more difficult. So let's explain, because it's a disposals account. So I tend to like to draw the asset and also do the depreciation, because it's important. So I would advise you to do it as we're going along. So it said you're working on the accounting records of a business for the year ending 31st of March 2007. An item of equipment was part exchanged for a new model on the 31st of July 2006. So this is where you'll do your T account now. So the original equipment was bought for £4,500 on the 11th of June 2000 X4. So do a T account with your asset on the debit side. So the equipment is on the debit side of 4,500. And it says depreciation over 3 years on a straight line basis, assuming no residual value. So when we're doing a disposals account, we've got the asset, which we've got as a debit of 4,500, and then we've got the cumulative depreciation as a credit that we're going to work out now. So you need those two accounts, because then we're going to close them when we open the disposals account. So let's have a look. It said for all classes of non-current assets, a full year's depreciation is applied in the year of acquisition and not in the year of disposal. A part exchange allowance of £850 was given, and then £5,180 was paid from the bank to complete the purchase of the new equipment. Okay, so that's relevant when we work out what's the value of the equipment. You'll see it a bit later on. So first of all, let's do the depreciation. So let's have a look. So the item of equipment, so it was bought on the 11th of June 2004 is when it was bought for £4,500. So again, so you charge a full year's depreciation in the year of acquisition, but not in the year of disposal. So you got June, so you got 2004, 2005, and then 2006. So 31st of March 2006 is our year end. So again, we're not going to charge any depreciation in that final year, but we're going to charge 2 years depreciation, so 2004 and 2005. It says its basic depreciation is over 3 years. So if you go 4,500, which is the cost, divided by 3 is 1,500. So the depreciation charge each year is 1,500. So debit depreciation, credit cumulative depreciation for year one. For year two, again, you debit the depreciation in the profit loss account, and then you credit cumulative depreciation, but this time you've got 2 years. So your depreciation is £3,000. So again, as I said before, what you should have now is your T account with your equipment on the debit side of 4,500. And now we know what the cumulative depreciation is. On the credit side, we've got £3,000 of cumulative depreciation. And that's really important because now we're going to close them both and open the disposals account. So watch. So that equipment at cost that we've got on the debit side, we're going to credit the equipment at cost to close it for 4,500, and we're going to debit the disposals account for 4,500. See? Your cumulative depreciation that you've got on the credit side, you're going to debit the cumulative depreciation to get rid of it. Then you go to credit the disposals account for £3,000. Okay? And then we've got part X, so this £850 part exchange allowance. So again, that will be debit the asset for £850 and credit the disposals for £850. So therefore, the equipment it costs us 4,500, yeah, with the cumulative depreciation was £3,000, which is 1,500 left, is it? That was what was left. And then the equipment at cost, so we basically got the part exchange of 850 towards it, means that we've basically lost £650. So that loss on disposal. So let me just show you. So you've got 4,500 is the cost, yeah, but then you've only got 3,854, haven't you? So the cumulative depreciation plus the 850 is 3,850, means that you've got a loss of 650. Okay, so loss on disposal, 650. And that's that one. So then it says calculate the purchase cost of the new equipment from the information above. So we've got that 850 now, which is on the debit side of the equipment cost for the part exchange. And it tells us that we paid another £5,180 from the bank to complete the purchase of the new equipment. So we've got 850 part exchange on this asset that we disposed of, but we've then paid an extra 5,180. So therefore, it says calculate the cost of the new equipment for the information above. So 5,180 plus the part exchange of 850, which means the cost is 6,030. Next thing it says, so before the part exchange entries were posted, the balance of the equipment cost was 19,380. At this point, I would draw the T account again. So the actual balance brought down of the equipment was 19,380 on the debit side, okay? We've then got this new asset, which is 6,030. So we would debit the equipment on the debit side, but then remember that we also disposed of that asset. So on the credit side, you would have the 4,500. I'm just checking my T accounts now, which I've drawn. So therefore, you would have a balance carried down of 20910. In fact, I'll spell it out for you. So on the debit side, what you would have now is balance brought down 19,380 plus the asset that you've acquired, so the part exchange and the 5,180, which basically means you've got 19,380 plus 6,030 on the debit side. So you'd have 25,410. That would be a balancing figure. Take it across to the other side, so it's 25,410. And on the credit side, you got 4,500, which is the asset you dispose of. So therefore, your balance carried down is the difference between the two, so 20,910. So balance carried down, balance brought down to the start of the next period would be 20,910. If I get a chance, I will draw it on my iPad and pen, just so you've got an example of how it all fits together. Okay. Next one says on the 30th of March 20X7, new fixtures and fittings were purchased. Okay, they were funded by a loan from a family member, and you were given the following information. So the purchase cost was 3,248, and the depreciation charge for the year was 406. He says complete the journal below. So the narrative is given, and we're basically doing the depreciation charges for the 31st of March 2007 for fixtures and fittings purchased on the 31st of March 2007. So we're just accounting for the depreciation charge. So what we would do is we would debit the depreciation charge in the P&L as an expense, which is what we've done here, and then we would credit the fixtures and fittings accumulated depreciation in the statement of financial position. Okay, hopefully not too bad for you. Next one is to do with accruals and prepayments. And it said the task is about ledger accounting, including accruals and prepayments. Again, I've got loads of T accounts written down for this, but unfortunately I can't show you them, as I would do in class. But anyway, so as you work in the accounting records for year ending 31st of March 2007, and in this task you can ignore VAT. So business policy, accounting for accruals and prepayments. An entry is made into income or expense account on the opposite entry into the relevant asset or liability account. In the following period, the entry is reversed. So for example, all it's saying is students tend to struggle with this. Let's say at the end of the year, you've had a prepayment. Okay, so let's say you prepaid an expense. So at the end of the year, what you would have done with your prepayment is you would have taken it off the expense because it's prepaid. So you would credit the expense, and then you would debit the prepayment. And that prepayment goes in the statement of financial position as an asset, okay? But it's still there at the end of the year, isn't it? So at the start of the next year, you want to get rid of it. So that prepayment, this is where the reversal comes in. So you're going to credit the prepayment to close it, and therefore you're going to debit the prepayment at the start of the next year. And that's all we're doing. So if you imagine at the end of the year, you've got an accrual, say on the credit side, that's, you know, then basically when it comes to reverse, you're just going to close it and put it where it needs to go. Hopefully that'll become clear as I do this particular question. So it says, so let's have a look. So this one says, okay, so you're looking at the rental income account. Okay, so this is rental income. So credit, click, credit liabilities, income and capital. So let's have a look. So we've got here, so first thing we're given is this prepaid income reversal. So again, what I said before now, we're talking of income, aren't you? So in the previous period, you basically would have an income figure on the credit side, but some of that will be related to the next period. So you've received it, but you've not yet earned it. So basically what you would have done is you would have debited the accrued or the prepaid income. So you would have debited the prepaid income to reduce the income of the account. Yeah. And therefore what you would do is you basically, let's start that again. So, so the previous year, you would have had the income, so you'd have credited income, and it would have had a figure. Let's say, for instance, £200,000 as an example. So £200,000, but within that, you found that some of it related to the next year. So therefore, what you would have done is you would, say, for 2,430, is you would debited the rental income account, and you would have credited the prepaid income account. That's what you would have done. So at the end of the year, you would have had this prepaid income account that was there on the credit side. So to close it, we would debit the prepaid income to close it, and then credit the rental income account. That's all this is. So I didn't explain that particularly well, but so it's the opposite to the prepaid expense, isn't it? Again, if I had the T account, it would be much easier for me to draw. So that's what we start off with, the 2,430. That's given to you in the question. So we can do the first. So the cash book for the year shows receipts for rental income of 25,550. So all I've done is just put that. So we'd be debited the bank, and it would have been credited the rental income 25,550. Straightforward enough. But within that 25,550, he says it includes £2,720 for the period 1st of the 4th X7 to the 31st, so to the 30th of the 4th X7. So from the 4th, so start again, from the 1st of the 4th to the 30th of the 4th. So it's basically that period after, isn't it? So our year end is 31st of March X7. So the next date for that is the 1st of the 4th X7. So it's been prepaid, isn't it? So within that income of 25,550, we need to take off 2,720, similar principle as we had before. So we would go debit prepaid income, 2,720, and on the prepaid income account, I would credit it for 2,720. See, so we debit prepaid income 2,720, credit the prepaid income 2,720. See, and then we would reverse it again at the start of the next year. So debit prepaid income 2,720, and then credit rental income. And we'll start again as we did here. So at the start of the next period, that will be 2,720. Okay, enough said. So we've got the prepaid income already in the accounts. We've got the 25,550 that we've paid, or sorry, that we've received from in the bank. But then we had to take off the 2,720. So what we want to know is what was the rental income for the year that goes into the profit loss account. And that's the balancing figure. So what I always tend to do with students is look at the side with the greatest amount, which is obviously this one. So 25,550 plus 240, take it across, so 27,980. And this is just the balancing figure, which goes to the P&L. Again, that's income on the gross profit. So other income would be 25260. I hope that's clear. If I get the chance, I'll draw some T accounts on my iPad to take through the question, because it's far easier when I can show you the T accounts. So it says, answer the following regarding the prepaid reversal. So there's 2430 in the rental income account. How were the elements of the accounting equation affected by this particular transaction? So as far as the assets are concerned, well, this is income at the end of the day, isn't it? So it's not going to have any impact as far as the actual assets are concerned, because it's not relevant, okay? So far as the liability is concerned, though, it will decrease it, because this 2430, which is prepaid income, it's unearned income. So that's why we class it as a liability, because we've earned it. So we've received it, but we've not yet earned it. So it's a liability, because we still need to do the work, if you like, or we still need to, I don't know, rent out the accommodation to get the income. So it's unearned income. So therefore, it's sat in the liability of the statement of financial position. And so therefore, so it would reduce that liability. It's in the statement of financial position, the liability. As far as the capital is concerned, so we know, capital plus profit. So therefore, it would have an impact in relation to the capital. So capital added to the profits figure, so it will increase the profit in that particular period. Okay. And then it says, so which of the following dates should be entered in transaction? So it's basically saying, what would the date be in this particular transaction? And it's the 1st of April 2006. See? Because our year end is the 31st of March 2007. So this would have been at the end of the period from the previous year. So we would have basically done the 1st of April 2006 is when this would have been. This figure here, so taking into account what I said before. So this is our year end now. So if we had dates, this figure here would be the 31st of March 2007. So we've debited the rental income, but we would have also credited the prepaid income, yeah? And that would have been the 31st of March 2007. When you reverse it, it goes to the 1st of April 2007, okay? So I'm just trying to take you through the next stage. hope it's not confused you too much. But anyway, so this one would have been the 1st of April 2006. Next one. You're now looking at the admin expenses for the year. I can just get my notes. And it says there was an accrual of £620 on the 31st of March 2006. This is an expense. So I'm going to have done a T account now, and I put an accrual on the credit side on the 31st of March 2006, 620. So do that on the credit side of the accruals account. He said the cash book shows payments for admin expenses of £14,215. So then I've done an admin expenses T account, and I've debited the admin expense of 14,215, and the narrative is bank. Okay. But what we're going to do is we're going to close that accrual. So that opening accrual of 620 on the 31st of March, I'm going to close it now. So in my accruals account, or your accruals account, you would have had 31st of March to X6, 620. So now we're going to reverse it. We're going to close it. So we're going to debit the accrual on the 1st of April 2006 for 620. So we've closed that accruals account, and we're going to credit the admin expense for 620. That's what we've got. Again, I can't show you the T accounts. I wish I could, but there we go. And then it says I'm going to say that again, so I want you to write it down. So there's an accrual on the 31st of March 2006, and this has been correctly reversed. So what you would have had at the end of the year, you would have an accrual of 620. So accrual 620 on the credit side. We're going to debit it to close it. So now it's gone. Therefore, what we're going to do is going to credit the admin expense. So you should have admin expense here now. On the credit side, you would have the accrual reversal of 620. You would debit the bank, so debit the admin expenses for 14,215. And now we need to work out basically if there's anything accrued in relation to these adjustments here. So 14,215 is what we've paid, but it says you have a bill for admin expenses totaling £1,995 for the quarter ending 31st of May 2007. This was received and paid after the year end. So again, I tend to get the students to draw the end of the year end line, which is 31st of March, he says, yeah. So 31st of March, and then we basically split this, so it's in quarters, so in 3. So divided by 3 is £665 for the year. So again, I would draw a line, 31st of March. So you got 31st of March, April, and May. So this is taking us to 31st of May. So April and May, yeah, is basically, when was it paid? So it's paid after. Okay, so that £1,995 is paid after our year end, but we still owe for March's. So that's 665, we still owe it, so we need to add it. So we're going to debit the expense for 665 and credit the accrual for 665. And that's what we would do in relation to the adjustment. So the admin expenses needs an adjustment of accrued expenses of 665 at the 31st of March 2007. So this is, so I don't like the way they do this, I'm going to prefer T accounts maybe. So the cash book figure was the bank, so which is the £14,215 that we paid. We take off that closing adjustment here, which if you had your T account, you'd see the 620. And then we add the closing adjustment, which is 665, which gives us an admin expense of 14,260. So let's level again. So we paid 14,215, but we already had 620 from the previous period that had been paid. But then we've also got that additional 665 that we need that we've accrued. So therefore it gives us a closing figure of 14,260. Okay. It says, shall we show how each of the following account balances will appear in the initial trial balance? Make a selection by click on the box to the left and then the opposite on the right. So accrued expenses, you know, so an accrual is a credit insofar as your statement of financial position is concerned. Accrued expense is, sorry, admin expenses is so we look at, I don't really use debt, so debit expenses, assets and drawings. Credit, liabilities, income and capital. So let's have a look. Accrual is a liability, so therefore that's why it's a credit. Your admin expenses, as the name suggests, is an expense, so it's a debit. Interest received is your income on the click side of the acronym. So interest received is a credit, and payroll liabilities is the L from the click liabilities. Excuse me, so therefore that's a credit. There we go. Next one, 1.4. You're working on the accounting technician for a sole trader business, 31st of March. The trial balance has been drawn and a suspense account has been opened. You now need to make some corrections and adjustments for 31st of March 2007. It says record the journal entries in the general ledger to deal with the items below. It says remove any incorrect entries where appropriate and then post the correct entries. So you don't need to give narratives. So you do not need to give narratives. Do not enter zeros into unused column cells. And what I tend to say to students for this type of question is write down what they've done. Because once you've seen that, you can see what needs to be done. Okay. So the first one, it says a refund of £398 for electricity costs was correctly entered into the bank account, but no other entries have been made. So what should they have done? They should have debited the bank, which is what they've done. So that was fine. So debit 398, but you've not got a corresponding entry. It should have been credit electricity costs, but they didn't do that. So what they would have had to have done to make it balance is they would have basically credited the suspense account, yeah? So we debit the bank for 398, that's all was done. So we basically need to credit the suspense account to make it balance, and that's what they did. So you write down what they've done, and then you can see what they need to do to put it right. So therefore, we're now going to close that suspense account by debiting it for 398, and then putting in the correct entry for the electricity costs, which again is 398. Important to write down what they've done so you can see what they need to do to put it right. This one says machinery repairs costing £470 were paid for using the business bank account debit card. The correct amount was credited to the bank account and debited to the machinery cost account. Okay, so the bank is fine. So what we've done is they credited the bank for 470, but they have debited the machinery cost account, and it should have been repairs. So hopefully you can remember that that is what we call an error of principle, because it's a wrong account altogether. So we need to put it right. So let's have a look what they've done. So they've debited the machinery repairs and they've credited the bank. So therefore we now need to close that machinery. Start again. The correct amount was credited to the bank account, but debited the machinery cost account. So they debited the machinery cost account. So we need to close it. So we're going to credit the machinery at cost account, and we're going to debit the repairs and maintenance, which is what it should have been. Yeah. So write down what they've done, so you can see what you need to do to put it right. Entries for prepaid equipment of higher costs of £460 were made. They were on the correct size of both relevant general ledgers, but the figure of £640 was used. So what they've done, let's have a look. So they've credited the entries for prepaid equipment costs of £460 were made. So they were on the correct size of both the relevant general ledgers account, and so general ledgers, but the figure was 640. So what they've done is they've debited the equipment costs for 460, but they've also credited the prepaid expenses for 640, haven't they? That's what they've done. Entries, yeah, but they've done 640. Okay. So what they've done, I'll say that again. So they've basically, so equipment for I've got it written down here on my T account. So entries for prepaid equipment high cost of £460 are made. They were on the correct size of both accounts, but a figure of £640 of use. So what they've debited 640 to the equipment hire costs, and they have credited the prepaid expenses by 640. Let me have a look. I'm being dopey. I've done this low. They were on the correct side, but the figure of 640 was used. It should have been 460, doesn't it? So let's have a look. So what they would have done is they would, oh yeah, because it's coming off. Okay, start again. So it was a prepayment, so they would have taken it off. So what they would have done is they would have credited the equipment at higher cost for 640, and they would have debited prepaid expenses for 640. That's what they've done, yeah? It was a prepayment, wasn't it? So again, write down what they've done. So they have credited the equipment at cost for 640, and they've debited prepaid expenses for 640. That's what they've done. So we need to put it right. So we're going to debit equipment at cost for 640. So that's now closed. And we're going to credit the prepaid expenses for 640. That's also now closed. So therefore we can now put the correct entry in, which is debit prepaid expenses for 640, and then credit the equipment hire cost for 460. Okay, hopefully that's explained it a little bit better. No entries have been made into the interest due on the prepaid loan of £5,000. So it's not been paid. Annual interest of 2.8 needs to be accounted for. So 5,000 times 2.8 is £140, okay? So we need to put that as the interest in the profit and loss account. It's not yet been paid, so we're going to debit the P&L for 140, and we're going to credit the interest payable in the statement of financial position, which is 140. And that's all that's saying. We're nearly there. It says, now that you've posted the journals, you're pleased to see the suspense account is clear and the trial balance totals agree. So therefore it should say you can or you cannot conclude the balances included are now free from errors. You can still balance even though you might have put the incorrect figures in, or it might be on the wrong side or whatever the case may be. So you can't conclude that everything is now free from errors. There can still be some mistakes even though it balances. And also it said you can or you cannot conclude the inventory valuation as at the 31st of March is included in the trial balance. Okay, a couple of mark questions. You're working as an account technician on the year-end accounts. The following are situations where you may have to record the adjustments. So let's have a look. Which of these would be acceptable professional behaviour if actioned by you? Okay, a client wants you to improve his profit figure. He's asked you to bring forward the date of a large sales invoice for the current year. You can't do that, can you? So that's not correct. Your firm needs to meet its deadline for preparing financial account for final accounts. Your supervisor tells you to save time by using not realizable value for all items of inventory. Nope. But this one, it says a client sales manager wants you to accrue for a bonus based on the current year's sales. The bank statement shows that a bonus was paid in the next financial year, so that's fine. That's why he wants you to accrue it because it's paid in the next financial year. 3 marks. What's that one there? One of the client's credit customers going out of business. You feel this news could be disregarded as effective date of the business closes after the year end. That would be unacceptable, wouldn't it? Because you need to recognise it, yeah? Because you know it's going to happen. 1.5. Okay, this one is about period end routines using accounting records for an extended trial balance. It said you're preparing the bank reconciliation for a sole trader as at the 31st of March 2007. The balance of the bank statement is a credit of 4924, so on the bank statement, and the balance of the cash book is 3057, so the difference between them, whatever that might be, okay? It says the bank statement has been compared with the cash book and the following points have been made. I'm going to explain an easy way for you to do this, because it said use the following table to show 3 items that should appear in the cash book, okay? So it's mistakes in the cash book. So anything here that's to do with the bank statement's not relevant. So we're only interested in things that will have an impact in relation to the cash book. So read that carefully. Let's say cash book or bank statement. So the first one says a cheque for £63 from the customer was dishonoured by the bank on the last day of the accounting records. No adjustments have been made in the accounting, so it's last day of the accounting period. No adjustments have been made. Okay, so far as the cash book is concerned, so it's a cheque received from the customer being dishonoured. So we would have debited the cash book previously. So this is going to have an impact. So therefore that one is relevant. So we're going to credit the cash book for £63. Tick it off. He said the customer is overpaid. So 2 remittance advice of £670 have been received and processed in March. 2 back credits are on the bank statement. See, it's on the bank statement. It's not relevant because we're just bothering about the cash book. So no matter about the case, so as far as we're concerned, it's right so far as the cash book's concerned, but on the bank statement, that's where the error has occurred. So it's not relevant because we're reconciling the cash book. Number 3, similar. So the advice has been received from a bank showing bank charges of £92. This has been entered into the cash book, so it's been fine as far as we're concerned. So it's been entered in the cash book, but not yet in the bank statement. So again, not relevant for the adjustments that we're making. Number 4, so a direct debit of £128 has been recorded in the cash book as a receipt. So a payment, we record it as a receipt in the cash book. So this one is relevant. So what we did is let's have a look, so a direct debit payment. So it was a payment and we record it as a receipt. So we debited the cash book for 128 when it should have been a credit of 128. So therefore what we would normally do is we would credit it to close it, and then we would credit it again to make it right. But again, to save having to do it. So again, we've done a bank payment of 128 has been recorded as a receipt. So we've debited 128, but it should have been credited 128. So we just double it for 258. So we're going to credit 256 in the cash book, and that will put it right. And number 5, it says a back receipt of £1,590 from a customer appears on the bank statement, but is not yet recorded in the cash book. Yeah, so again, it's on the bank statement, but it's not yet recorded in the cash book. So we received some money from a customer that we've not put in the cash book. So we're going to debit the cash book for 1,590. So that one is also relevant. A faster payment to a supplier of £504 has been delayed by the bank due to a change in the recipient's account number. It's not showing on the bank statement. So again, it's a bank statement issue. It's not relevant so far as our particular scenario is concerned. Okay. And then it says, as an accounting technician, why is it important for organizational policies and procedures? Choose 1. So as an accounting technician, why is it important to follow organizational policies and procedures? And I'm just going to say to enable both individual and team responsibilities to be understood. So accounting, so organizational policies and procedures are obviously so that everybody knows what they're doing and does the correct thing. Okay. Organizational policies and procedures. I put these figures in, so I'm quite sure that you're okay with these, but let's just go through it so you can see. So allow for doubtful debts obviously comes off your trade receivables. So that 1,500 goes in your statement of financial position on the credit side because it comes off your trade receivables figure. So your debtors, let's have a look. sales ledger control account. So your debtors are 38,394, but you're also going to put aside an allowance for doubtful debts of £1,500, and that will be your figure in your statement of financial position. But anyway, for this purposes, so you just need to be aware of where does it go in the extended trial balance, okay? And that's what we're doing. So bank is 5726, the debit side, but there's an adjustment of 2416. So again, so if you've got a debit here and a credit here, you're going to take it off. If you've got a debit balance and you've got a debit adjustment, you would add them together, okay? So again, similarly, if you've got a credit balance and a credit adjustment, you add them together. But if you've got a credit balance and a debit adjustment, you would take them off. So for the bank, 5726 on the debit side, and on the credit side, 2416. Bank is a current asset in the statement of financial position, which is 3310. Capital, again, you can see here you've got credit capital 1907, but you've also got an adjustment on the credit side of 9430. So you're going to add them together. So as you know, so capital is in the statement of financial position. So on the credit side, so credit, liabilities, income and capital as far as click is concerned. So 28,500. Your closing inventory goes in two places. So your closing inventory goes in your current assets in your statement of financial position. So it's an asset, and it's also part of your cost of sales in your profit loss account. Opening stock plus purchases minus closing stock. So 1750 goes as an asset, statement of financial position. So obviously that's a debit, and corresponding credit in your profit loss account. Depreciation charge, so debit, expenses, asset and drawing. So expenses, we know is a debit. As irrecoverable debts, it's an expense we're writing off. Office expenses of 3542. Again, you see you had a debit here, you had a debit here, so you add them together, and that's an expense that goes in your P&L, 3452. Opening inventory. So again, that's on the goes in the profit loss account, it's part of your cost of sales on the debit side. And then we've got payables. So on the payables, so we've got credit 1460. Then we had an adjustment of 1320, which gives added 2780. So other payables is a current liability in your statement of financial position. Payroll costs is an expense in your profit loss account. Purchases, so again, so credit, liabilities, income and capital, debit, expenses, assets and drawings. So there, so purchases is goes in your statement of profit and loss, so 177,363. Your purchase ledger control account is your debtor, is your creditors, so your suppliers. So you owed your suppliers 19,402. You got an extra 495 to include. So therefore, you owe your suppliers 19,897, goes as a current liability in your statement of financial position. Sales is your, obviously your click, so for your credit liabilities, income, so therefore on the credit side is 26807, so you credit your sales in your statement of profit and loss. Sales ledger control account are your debtors, so therefore is a current asset, so therefore you go to debit your statement of financial position of 38934. VAT, it's on the credit side, as you can see, so 5225. You've got an adjustment, which is on the debit side of 2416. So therefore, the difference between them is 2809. VAT for this one is a liability in the statement of financial position, so it goes under current liabilities as far as your VAT is concerned. Your vehicles at cost, so you had it in your original balance of 22,280. You've got an adjustment that was 9,430, which means your vehicles, which are assets in your statement of financial position, is 31710. Vehicle depreciation obviously goes on the credit side in your statement of financial position, 13,873. Okay, and these are the balancing figures that I've put in. So when you look at it, so I'll take that off. I put those in. I'll just show you just so that you know. So after I put all the figures in, this is what we were given. And you'll notice that the income side is greater than the expenses side. So therefore, let's have a look. So therefore, let's have a look. We know, is that right? Yeah. 285,587, and that's 263,482. So our income is more than our expenses. So the balancing figure goes in here. Can't remember where it was now. So 22,105. Watch. 22,105. See, it balances now. So that's your profit, isn't it? So your profit loss for the year. And then obviously you can see the same in relation to statement of financial position. So therefore, 22105. Okay, that's it. Hope it helps you. My apologies for a couple of the things in the middle. I will do a separate video for you just to draw those T accounts for the accruals and prepayments, because it really is far easier to do when you can see how it works for the T accounts. That's it. So I hope it helps. I'll post it, and then you can hopefully it will help you. So, oops, hello. So I'm going to stop.